China is facing a crisis it never imagined it would face in a million years. The housing crisis in the country has been worsening for 3 years, but has now reached a point where it directly threatens the global economy. So today we're going to talk about what's going on in the People's Republic of China, what led to this crisis in the first place, and what the government is doing to combat the situation. So first of all, what's going on? China's housing sector has been a subject of interest in the global community for quite a while, and it's not looking good for the country's economy or the world's. Over the years, the country had come to rely on its real estate sector for growth and prosperity, but the very foundation of the republic's economy is now shaking. Prominent companies are being forced to cut down business as they deal with huge losses and even bigger debts. As of September 1st, 2023, 34 out of the top 50 real estate developers are having trouble paying back the borrowed amounts. Things aren't any better for the remaining 16, which includes the Country Garden Holdings Co., China's biggest real estate company. Together, this group of companies needs to pay back a mind-blowing sum of $1.48 billion in September, which, by the way, is the highest amount they've had to pay back since January 2023. But where does the debt come from in the first place? Well, China's real estate sector was not always struggling. A long time ago, the sector was actually lucrative. Real estate developers decided to make the most of this surge and asked for loans. However, it proved to be a series of bad decisions which have landed the sector in its current position. According to reports, existing home prices have fallen by about a jaw-dropping 15% in prime neighborhoods, in cities like Shenzhen and Shanghai. The situation is not any different for more than half of China's Tier 2 and Tier 3 cities. In Charles Chang's words, who leads corporate credit ratings for Greater China at Standard & Poor's, what's happening in the Chinese property market is unprecedented. This is unexplored territory for a country that relied on its real estate sector heavily for creating jobs and bringing in revenue since the launch of its market-oriented housing. To put it in perspective, the sector was responsible for more than a quarter of all the economic activity of the country. What's more, the crisis has significantly driven down the value of Chinese currency, but much more importantly, it presents a bleak picture for the country's middle class, who turn to real estate as a form of investment for their life savings. How did the People's Republic of China land here in the first place? Well, there are several factors. Here's a look behind the scenes. First of all, the country's population is not booming the way it used to. For years, Hong Kong was hailed as the world's most populous country, but things have changed now. The Chinese population has started to shrink. According to reports, the death rate was significantly higher than the birth rate in the country in 2022. Unfortunately, the government has not helped with matters. By introducing strict policies, particularly the 3 Red Lines policy of August 2020, the Chinese government has directly contributed to the problem since they limited the developers' financial capacity. The combined effect of these factors has created a unique situation where real estate developers are sitting on more housing units than ever before. An investigation by Gavical Research found that unpaid bills from private Chinese developers have reached a sky-high total of $390 billion. And it does not look like things are going to get better. Economists are predicting low economic growth for the country in the future. In fact, some economists don't think that China would even hit the government's target of 5%. That said, these predictions are not based on nothing. Analysts are accounting for the fact that there has been no improvement in imports and exports in recent times. In fact, there's been a downward trend in these sectors. Foreign investment has not been looking too good either, as the country saw a drop of more than 80% in the second quarter of this year compared to 2022. However, the most alarming were the consumer prices. They dropped in July, making it a first in 2 years. But what exactly does this mean? Well, it's simple really. It means that consumers are spending less, which ultimately means there's no one buying houses. So now that brings us to our next question. How bad is it? To understand the severity of the situation, we take a look at China's largest real estate developer. You'd think that Country Garden might be faring well in this time of crisis, but no. Country Garden is in the same waters as everyone else. According to the latest announcements, the developer was gearing up for a loss of $7.6 billion for the first 6 months of the year. Investors have walked away because they've lost faith. And who could blame them? With mounting debt, the fear of the company defaulting on billions of dollars in loans becomes all too real. China Evergrande only adds to worries. The real estate developer is only one in a long list of many who filed for US bankruptcy. The company already defaulted on $300 billion of debt back in 2021. More than 50 Chinese developers have defaulted in the last 3 years, as per the credit ratings agency Standard & Poor's. Unfortunately, the housing crisis is slipping through the cracks and spreading everywhere in the economy. Financial trust companies have been the first to take a hint, as for years these companies have chosen to invest in real estate projects. However, given the ongoing housing crisis, the companies have had no way of providing their user base with investments promising high returns and whatnot. The Zhongrong International Trust has been one of the many to suffer the consequences. The company recently missed out on payments to its investors, which needless to say has created uproar and unrest among the general public. One could only imagine the far-reaching effects of the crisis on the global economy, and there will very likely be one. For years, China has been the source of more than 40% of the world's economic growth as per BCA research. The country has served as the trading ground for some major markets in the world, including the US, but the decrease in consumer spending has only driven away business. However, the global community is yet to react. Investors in the United States and Europe have been too preoccupied with their own problems to focus on the bigger picture. However, that does not absolve the Chinese government of responsibility. What is the Chinese government doing? The government is making some moves. For one, the country's central bank decided to cut its one-year loan rate, used by most corporate loans in the country. However, the 5-year rate is still in place. Policymakers have also relaxed mortgage requirements. Though economists were expecting more radical changes, the fact the government is at least willing to acknowledge the situation on some level is good enough. There was a growing fear amongst analysts about the government not acknowledging the situation thanks to long-standing methodologies that fail to capture market turning points accurately. Henry Chin, who has more than 20 years of experience researching global real estate markets, is well aware of this situation. The head of research for Asia Pacific at CBRE Group Inc. says that home price data in most countries around the world is based on total market transactions. But for years, China has stuck to using selective samples. However, this method is not truly reliable, as when a market grows, the true market condition cannot be truly reflected in such data. The problem has only worsened under the government of President Xi Jinping, who made it harder to access information under his rule. With restricted access to data and information, questions have been raised about the ability of policymakers to carefully assess the situation and make appropriate decisions. That said, the government played a direct hand in creating this situation. First, it allowed developers to borrow loans unchecked, and then policymakers suddenly decided to change strategies and change the flow of cheap money to real estate companies, which essentially created a shortage of cash. However, many are hoping that the government learned its lesson and would no longer employ the borrow-to-build model in the future. The strategy is only successful as long as prices keep going up. Once the prices go down, as did with the real estate market, it all comes crumbling down. The state-run Economic Daily said that the process of diffusing risk cannot be completed overnight, and the market must give it a certain amount of patience. One reason behind the government's decision to sit back and wait for things to unfold might have to do with the fact that despite the handicaps, real estate developers have been able to deliver apartments over the months. China Evergrande managed to deliver 300,000 apartments, and though it was way low compared to its goal of 1 million, it managed to achieve the milestone while on default. That said, the only question that needs to be answered right now is whether the government's efforts will prove fruitful. So let's hear about the future of the country's real estate sector. As unbelievable as it sounds, China's housing market will most likely begin to stabilize in the coming months. However, the market won't return to the same level as late 2020 or early 2021. Why do analysts say that? Well, there's been some hope after the CPC's 20th Congress in November 2022. The leaders convened and reaffirmed the importance of the real estate sector and showed their commitment to improving the sector with the introduction of the 16-point reduction package a month later. The package came into effect in January 2023 and introduced a bunch of changes, including new rules for personal housing loans and financing measures. What's more, these reforms have handed the power over to the cities, allowing them to adjust their minimum loan rates and remove limits for houses on their first purchase. However, the government still needs to improve on several fronts, like imposing taxes on the property and more. Only a serious evaluation of the crisis can turn around the situation. Though it seems like an impossible milestone, the rewards are significant. Thanks for watching, and we'll see you again soon. Make sure to watch the next video.